It's easily one of the most important aspects of the market. It is literally what makes the market, and it's something that not enough people pay attention to, which is kind of surprising given what we just talked about. Today we're going to be talking about order flow, right? Order flow with volume profile. Hey there, John Henry here, Slingshot Futures Trading Group, SSFTG. Like I said, in this one we're going to be taking a look at day trading with order flow volume profile and kind of breaking down where it comes in, how it's useful, what it tells us, and all of the benefits of utilizing order flow in trading. Now, first off, before we can go over the benefits of what order flow is, we kind of have to understand, well, you know, in order to use it, we have to know what it is. So as far as order flow is concerned, what I'm talking about when I'm talking about order flow volume profile is simply just the volume that is traded at each individual price point. So if I were to narrow into just this area between 440 and 430, right, and I just wanted to look at today's price action only, so we would have to zoom out a little bit here. What I can do is I can go into the NinjaTrader dropdown, use the order flow volume profile, go from the entirety of the day, even though it only traded up there momentarily, but we can go across the whole thing, and we can see that based on the block that we were looking at between 50 and 60, or wherever we picked before, all of the volume that was traded there at each individual price is plotted within this zone. Now, that is just order flow in a nutshell, and we can see that there is also the largest volume point, which is the POC, or point of control. That's order flow. I've done a ton of videos on order flow. It's relatively straightforward stuff. If you need some references, we've got a lot of videos, like I said. But order flow in and of itself, and the reason why it's so important, is because it's telling us exactly where the balance of power is. It's demonstrating to us who's in control, and more importantly, where are they in control from, right? Where did they get in and what are they doing? Now remember, the market is made up of an infinite amount of reasons for longs and shorts at infinite numbers of times. That's just chaos in a nutshell. That's how it all works, right? Somebody might be buying as a swing trader, somebody might be selling as a scalper to give them the contract. It's all the same thing, really. It creates the market, and that's the volume underneath it. But we have to understand that the market operates and moves based on when we have an imbalance or a balance of power. If the market feels as though it's at a good value, then generally speaking, more people will buy into that area, and less people will sell because they know it's not worth selling there. Or at least more often than not, unless they're wrong and it breaks down. But this tells us where they're from, right? Where they're in from, what they're doing, what they're trying to do, and it gives us a directional bias on both sides. And that's a key to understand when you're looking at volume profile. If I go across the entire day, remember, just because we've got the POC sitting at 16,405, that may be the largest volume node, but these could be longs, they could be shorts, maybe they were longs from earlier in the day who were trying to buy that dip. That worked out pretty well. If they tried buying over here, it didn't work out so well. If they're shorts and they were trying to sell over here, it didn't work out so well until over here, and then we can see that maybe they were defending it. Right? This is applicable on both sides, and that's why it's so important, because we can gauge what's going on. What is the market doing? Utilizing a little bit of common sense, right? We got to use the thing between our ears here a bit, but if we break this down, where's the POC at this point in time across just today, right? The entirety of the day, and what is that possibly telling us? Now, if we take into account where the POC is smack in the middle, but it depends on when in the day that occurred. Now, if we were looking at this functionally from earlier in the day, then this looks like a potentially great buying setup, right? It looks like the buyers held out pretty nicely and rallied it back up. But remember, this is both sides. What about the sell side? If the sellers were selling off of this area, were they successful? Did they achieve anything? Were they able to get anything done? And this is where we can narrow in to see, well, what were they able to do? If we break this POC line down, which is this bright red one cutting through, and we look at the interim prices, we can very easily see that you could justify this as sellers. Sellers could be looking to pressure back off of that POC area, and if we're using that thing between our ears, where is their stop? Well, their stop's probably going to be above this high, right? That would make a logical stop point. So if we go back across that and look, how did those traders work out? Were they able to respond off of targets? Were they hitting targets? Were they missing targets, right? What was taking place in this whole move? And I got to make sure that we've got it perfectly aligned on there because, well, algos are ones and zeros. So this is a really, really good example. We know that this POC is a major zone of interest that obviously at the time sellers were selling off of. But if we dissect this a little bit further, scalpers who are looking at about half the target versus their risk, so it's a 0.5 to 1 type thing, then that would be right here. And if these are sellers, do we see that buyers are bouncing off of that, or in this case, shorts exiting as targets, buyers? Are they exiting there? Yes, right? When it comes back up, does it treat it as resistance? Yes. When it comes back down, do we see support? Yes. 1-to-1 target? Yes, right? So even from the short side, looking back at this, it would have looked like you were absolutely insane for selling this kind of rally up. But guess what? Playing the POC on both sides and understanding that the market is made up of both buyers and sellers, we can see that the sellers were at least satisfied. And you'll hear me talk about that a lot. Have the sellers or the buyers been satisfied in their move? Have they achieved their minimum objective? No less than 0.5 to 1 if you're looking at reward versus risk, right? It's got to be that way. Any less than that and it's just not worth it. So from that perspective, have they been satisfied? Now, if we go from the long side of things, right? If buyers were buying here, where would their stop be? Well, their stop is either going to be underneath this low or it's going to be underneath, maybe that, but more likely this one, right? It's going to be one of those two. So we can measure them up. Where does the market demonstrate that it shows support or resistance? If we draw this up from a logical, again, using the thing between our ears, a logical stop point to their base average entry point, the POC, do we see suggestions in price that are telling us that these buyers, we're looking at the buy side now, are taking profit at logical targets? Their 0.5 to 1 scalp, that's where the market paused. The 1-to-1 target, that's where the market topped out before pulling all the way back out to an L5 before rolling back up to another high. So yeah, I think it's pretty fair to say that even though these shorts were satisfied, the longs also were able to play ball. So really, how can that benefit us? I mean, hopefully it's fairly obvious, but one of the biggest perks of understanding the volume and the order flow is really understanding the mindset of the traders behind the trade, behind the volume. Even if they were algorithms, even if they were HFTs or computers that placed the trade, it doesn't matter. They were still programmed by a human. Right? So the emotions are still going to be there whether they wanted them to be there or not. And we can track what the computers or the people are thinking at any given time. And remember, based on the mindset of chaos here, this is looking for imbalance points where the market has found value or non-value, right? Where it's too expensive or too cheap. And while the market's driving down, you'll notice if we were to plot this whole thing across, yes, down here in retrospect was very cheap, but it doesn't look like the market found value until right around this, 16,003, a little under 320s. We'll just say 320 to make it easy. They weren't buying here at the settlement. That's that dark yellow thick line there. They weren't buying just above settlement. They were buying here, right? That's the majority of where their volume was. So if we're trying to figure out what these traders are doing, let's put a stop underneath the logical point, which would be the low. And we'll draw it up to the top of where they started accumulating or even to the POC of that area. Now we have to ask ourselves, are we seeing responses at likely objectives? 0.5 to 1 scalp, yes. 1-to-1. They missed it first. They actually took profit ahead of it a little bit and then treated it as support later on. We get up to the 2-to-1 target. That was a brick wall. 3-to-1 target, almost reversed the whole thing. Now we're at a 5-to-1 target and it's pulling back again. So yes, these traders are being satisfied, even though it's not the POC. We can see that these traders, if they were longs, were looking for the upside. Now remember, the market's made up of both sides. So if these were shorts, have they been satisfied? Well, if they're selling off of a POC, and again, the POC is not there, but if we just project where it would be down there, it'd be right there. If they're selling into this, where is their stop going to be? Right? Their stop's got to be either above these more intermediary highs, or it's going to be way up at the top. They just don't have many other choices. So if we're looking at this from that perspective, we have to see, well, have they worked out? Right? If we put a stop above this high, right, and we go down to the POC, have those traders been satisfied? Do we see suggestions that the market is responding there from the short side just as well as the long side? Check mark. Yes. So we know that the sellers, even at the minimum, have been satisfied. Now, if we go a little bit further out, the wider swing, that's only scalpers. The only traders who have been satisfied there are scalpers. Stops that are further up than that, they were just taken care of and satisfied. But aside from that, that's it. If we go all the way up to the top, the behemoth stop, obviously they have not been satisfied in any way, shape, or form, and they've gotten nothing but pressure. And the important part about that is it tells you exactly what the market's trying to do and where it's trying to do it from. Whether it's long or short, it doesn't matter. You know where the response points are going to be because humans and algorithms that they program are predictable. Now, based on that predictability, that's where the order flow comes in to tell us where we should be measuring. What points of interest are of interest? You have heard me talk about previous videos on volume void pockets, VVPs. VVPs are the opposite of a POC. It's the lowest point in volume. That operates in the same context that no trades or very few trades were taking place there. Now, why would that be? Why would a situation in the market, in all rights and regards, in full chaos theory, have lower volumes in some point? Well, maybe that was a major area of interest that nobody really wanted to trade around. Or maybe it was a major swing low that a lot of people had their stops in. If it hits a stop, it can create a cascade event that doesn't allow a lot of volume to trade there. Or just using the thing between our ears, maybe the market just didn't spend a whole lot of time there. Regardless of the reason, those VVPs or lack of volume can show areas of interest that the market will want to pull back to. The market hates inefficiencies. That's not how it works. The market is an efficient beast. That's its purpose. So when it has low volume nodes, it treats them as support or resistance just as frequently, but a little bit later on. But we wouldn't be able to tell where the voids are or where the POCs are or where anything was if we weren't tracking the volume. And that's why it blows my mind that people don't look at the volume. It's crazy. There's so much information in what's taking place here that it's almost an absolute must in any trading system. Either way, I'll get off my soapbox on the order flow, but that's going to be the overall benefits and perks and why I use order flow so much and why it takes such a main spot in my trading and why I focus so much on it, because it is the story. It is the market, the volume that drives the ups and the downs. Well, without the volume, it wouldn't be there, right? It is the market, and that's why it's so important to track. So that's going to do it for this one. I hope you found it useful and interesting and something you can add to your tool belt if you haven't already. And if you are already using order flow, then it's a nice little refresher course as to why it's so important. Of course, if you have questions, feel free to drop them in the comments below or swing in the afternoon live session with us on YouTube. We're live almost every trading day at around 1300 Eastern, and that way you can hang out with us while we overview the patterns and setups for the day from the VIP morning session, and we can also hunt for some scalps along the way to see if anything sets up in the afternoon. If you want to get in the morning VIP room, you can check out a trial on the main page of ssftg.com, and that's also where you'll be able to download our free 24-page guide on risk reward once you register for a trial. So make sure to get all of that there. Have a fantastic rest of your day. I hope you've had a fantastic new year going into the new year of 2022. I look forward to seeing you all in the next live room and the next video and all that fun stuff too. So have a great one. We'll talk to y'all later. Thanks.